If you failed accounting certificate level exam due to this question, this is how it's done. But wait, do you need T accounts or can you do workings using linear approach? Let me show you. Statement of cash flows is made up of operating activities. So you'll start with the profit before tax. This figure will be extracted from the P&L. Then you will deal with non-cash items. So number one, depreciation. Depreciation needs to be added because it was deducted in your P&L. It's non-cash in nature, so add it here. Finance costs needs to be added because they were deducted in P&L. Again, they're non-cash in nature. Loss made on disposal. It's a very common practice. A lot of businesses, they sell their non-current assets. So if you made a loss, add it here because you deducted in your P&L. Again, this being non-cash in nature. And of course, if it was a profit, you would have deducted it here because you added in your P&L. Then you've got impairment needs to be added. Amortization needs to be added. After this, you'll deal with the working capital. Decrease in inventories. Now always remember, when you're dealing with any type of assets, when there is an increase, you will take it away. If it is decrease, you will add it. With the liabilities, if it's an increase, you'll do the same. Decrease, you'll deduct it. Now what does that mean? That simply means is that, let's suppose in X1, X2, your inventory went up from 500 to 1500. Just take the difference between these two. The difference is 1000. This 1000 is an increase from last year to this year. So increase, because we're dealing with inventory is an asset. So if it's an increase, you will deduct it. The logic behind this is you spent money. When you spend money, you take it away. So decrease in inventories. Of course, decrease, if it was a decrease, we would have added. So in this case, we will add it. Same, let's say if there was an increase in trade receivables, we will simply deduct it. We will do the opposite. With the assets, we will do the opposite. But if we talk about your liabilities, so decrease in, let's say, trade payables, you do exactly the same because, let's say, if you owed money to the suppliers, £5,000, you don't owe them anything this year, which means that you must have paid them 5,000. So from last year to this year, it has decreased. Therefore, you take it away. Same logic. And if you are dealing with increase in provisions, you'll do the same, add it. By adding all of these numbers, you will have cash generated from operations. It can be a positive or negative number, cash generated or used from operations. If you like this video, please comment, subscribe to my channel, and I will get back to you with a lot of nice and very interesting videos like these. Good luck.